YouTubers, Mike Martin's here, Mike Martin's channel. I got a really important, very important emergency announcement here from Better Dwelling article they put out. And a lot of people are saying, oh, Mike, you know, you're always reading Better Dwelling and this. I read a lot of articles from everywhere. But I gotta read Better Dwelling because they are the ones that are actually putting out the facts. They're actually comparing numbers. They're doing their best to align things, to make people better understand. A guy like myself, I can understand everything they're posting here, understand what the graphs are trying to depict. Better Dwelling is doing a very good job at waking up the people into a reality. Okay? So a lot of people's like, oh, Better Dwelling, every time they write an article, you're like a little doggy running when you shake the car keys. Well, yeah, I'm a little doggy. I am. Secretly. Anyways, guys, here it is. Today's article. Canadian mortgage growth plummets to the lowest since 2001. And what does this mean? Okay, let's look at it here, okay, guys? This is from today's date. Slowing Canadian real estate sales are hitting mortgage credit growth. Bank of Canada, BOC. Numbers show June's mortgage credit numbers grew close to half as much as last year. Even worse, the slow credit growth is on track to head even lower. Canadians are now in the worst mortgage market for growth in nearly 2 decades. Okay? And 2 decades ago, things weren't even that good. Things were pretty bad 2 decades ago. So, I mean, it's going back to the other poop storm that we were in 20 years ago, if anyone remembers 20 years ago. Canadians hitting new mortgage debt record in June. The balance outstanding mortgages hitting new record. Canadians owe $1.515 trillion worth of mortgages in June, up 5.06 billion from the month before. Guys, that's 1.5 trillion. Okay? That's almost at what Canada's debt is at. I think Canada's debt is at $3 trillion. I'm not sure. Don't hold me to it. I think Canada's debt to, I guess, global debt is at 2 trillion or 3 trillion. So don't hold me to it, but I'm just throwing that out there. 5.06 billion from the month before. That sounds like a lot, but it's almost half the dollar volume increase from last year. But it's almost half the dollar volume increase from last year. Key sentence in that paragraph. Last year being lower than the year before that as well. Mortgage debt in a new high, but the market is experiencing dramatic slowdown. So this is a very well put together graph. And you know why? Because you got your recession bars here. And then you go back down here, it shows you the recession. So 20 years ago, if you remember that, what was it, up here somewhere? When there was that big poop show in the early 90s, and then boom, 2009 hit. And there's Canadians' mortgage credit. So people are taking out more and more mortgage debt. So here's the 3 recessions on file. Well, there's more than that. That goes back to the mid-60s. It was a mini crash. Anyways, Canada hits the slowest mortgage growth since 2001. The growth of the debt pile is rapidly decelerating. The annual rate of change fell to 4.1%, to the lowest it has been since May 2001. In 2001, the Canadian economy faced a huge slowdown, forcing the Bank of Canada to cut rates by 100 basis points to prevent a recession. So they need to stimulate the economy. So they need to stimulate the spending economy, so people could spend more by lowering interest rates. Okay? Since we're discussing hiking rates, not cutting them, this should continue to trend. The trend tapers to be heading lower according to near-term data. So Canadian outstanding mortgage credit change. Sorry, guys. The 12-month percentage change and 3-month annualized change of outstanding mortgage credit. So here it is. So this is the 3-month annualized. There is the recession, okay, right here. And this one is a 12-month. So you see where it's heading right now. There should be 2001. There it is, right there. 2001. Should be right there at that graph. So these graphs are very, very, very well presented by Better Dwelling. That's why I read their articles. And everyone thinking, yeah, here it is here, 2018. And everyone thinks I'm trying to grandstand them and stuff, which is not true. They actually put stuff out there that makes sense mathematically to someone that's looking at a market. Annualizing recent mortgage growth, it looks like the market will see further slowing. The 3 months annualized fell growth fell to 2.8%, a bit of correction, since it includes some of the busiest months of the year for the real estate sales. Previously, when the trend was this low, it bounced higher due to spring monetary stimulus. So again, monetary stimulus. Back to the other key paragraph we had up there. Key sentence in the paragraph there. Neither are in the cards right now, with the government saying that rates will normalize soon. Normalize is a code for continuing to rise. That's right, people. They don't want to put fear in investors, right? The slowdown of mortgage growth is due to a slowdown in sales. Again, sales. Very, very key. Middle class isn't buying anymore, which is being blamed on a stress test, if only were so simple. But the slowdown is much larger than the stress test. Thank you! Thank you! Higher interest rates and peak growth and home sales are more likely behind the growth. That mortgage stress test is so effective, it's hitting the rest of the world's markets as well. Yeah, so, no, all the other world markets, Sydney, Melbourne, Auckland, London's been in the pits for over 20 months now. So London's been on the decline. You know that, guys, I want to kind of go a bit off topic. You know that London actually loosened their lending rules? They backtracked and loosened their lending rules to stimulate exactly what Better Dwelling is doing here. So Bank of London, if you read, is actually the UK bank, or the UK is actually loosening lending rules, putting people into more debt, putting people into positions where they can't pay back. You know, guys, stop feeding yourself in the mind saying, oh, I'm young, I could pay this off, it's only 20 years, in 20 years, you know, I could retire, I'll have this paid off. The way things are headed, you won't have anything paid off. And I'm not trying to damper your dreams or throw salt on your, you know, on your plans. It's just, it's too exhausting is what it is. The best word to say is exhausting. They raise rates, prices go down. Very simple. Prices go down, rates go up, and then it balances out to the average income. If the people's income don't go up, rates have to go up, and in turn, prices go down. But the thing is, people are like, well, we're paying less for our homes. No, because if rates go up, you're not paying less for your home because you're paying more to the bank. Instead of paying your house off 2 times, you'll be paying your house off 3 times by the time you pay it off to the bank. So there's a lot people need to understand. Because price of housing goes down doesn't mean it's cheaper to borrow. It's more expensive to borrow if price of housing goes down. People need to look at the fine line. You know what I'm saying? That's why I worked hard to pay off my house in full. Because I knew what would happen. And like I said, people are like, oh, you bought your house. What's wrong with you? No, you know what? I bought my house because I knew that there was going to be a huge storm in the horizon. Everything is perfect. The perfect mix right now we're in right now. So, anyways, I just want to say this to you guys. I appreciate everyone liking and subscribing to my channel. It really means a lot to me, the comments you put below. And even to the haters that dislike my channel or dislike my videos, it's good because it actually shows that my video's gotten to you, or my video is making you think outside the box once in a while instead of believing everything that you see in the mainstream media. It's Mike Martins here, Mike Martins channel. Comment below. Let me know what you guys think. Thanks for watching.